Hello and welcome back to BearishBulls channel. Today we're going to talk about price pump of Snap. In this video we'll also talk about the technical analysis of Snap stock because it is a key component of determining whether it's worth buying or not. The IBD stock checkup tool shows that Snap has an IBD composite rating of 89 out of a best possible 99. The rating means Snap stock currently outperforms 89% of all stocks in terms of the most important fundamental and technical stock picking criteria. The best stocks will often rate 98 or 99 at the time they launch a big price run. It has a relative strength rating of 93. The rating shows how a stock's price performance over the prior 52 weeks holds up against all the other stocks in IBD's database. Look for stocks with a rating of 80 or higher. The stock's relative strength line has pulled back from recent highs, though it is rebounding. In addition, Snap has an accumulation distribution rating of C+. That rating analyzes price and volume changes in a stock over the past 13 weeks of trading. Its current rating indicates more funds are buying than selling. A grade of A signals heavy institutional buying. The lowest rating of E means heavy selling. Think of the C grade as neutral. Snap stock is currently not a buy. It has moved a lot since an initial breakout over a 26.86 buy point in early October and is extended. The stock is consolidating along the 10-week moving average, but has no clear buy point yet. However, Snap stock, on April 7th, popped above its 50-day line, which is a positive signal. After third report this year of shopping-related acquisition, stock continues strong run that pushed price up 400% in past year. Snap Inc. shares have jumped more than 20% in the past week as the company attempts to move Snapchat beyond messaging. Shares of Snap plus 4.93% gained 5.9% Wednesday trading after a report from The Information detailed the company's plans for new e-commerce tie-ins on the Snapchat app. The stock is now up 21% over the past 5 trading sessions, as the company continues its efforts in recent months to find new uses for its popular mobile app. So if you want to know more, please make sure to subscribe to BearishBulls channel and smash that like button for the YouTube algorithm, and make sure to check the description below to get for free stocks valued up to $3,700 and for your weekly guide in investing in the stock market and real estate. Snap reportedly acquired the startup behind ScreenShop, an app that lets people identify and purchase items they see in photos, in a deal last year, according to a Wednesday report. ScreenShop's technology could help Snap with its plans to deliver shopping recommendations to users based on their saved photos, an initiative the company intends to discuss at its May developer conference, per the report. A spokesperson from Snap declined to comment on the company's e-commerce ambitions or whether it had purchased ScreenShop. Snap has been looking to differentiate its app and also drive users toward features beyond messaging, a staple of Snapchat but a function that has somewhat limited revenue potential. The company has been looking to acquisitions as it expands its capabilities, scooping up Fit Analytics earlier this year, which gives Snap access to technology that helps people determine the right size of clothing when shopping online. Snap also bought Aerial AI, which offered augmented reality tools meant to help enable experiential retail, among other capabilities. Snap won praise today for its other efforts to drive users toward more revenue-generating features as Atlantic Equities analyst James Cordwell upgraded the stock to overweight from neutral. He pointed to momentum for Snap's original shows in its Spotlight section, which features viral, user-generated content similar to what can be seen on TikTok or Instagram's Reels. The traction for these newer areas of Snapchat, combined with Snap's pipeline of ad products, could help the company generate average revenue per user closer to what Facebook and Twitter Inc. TWTR, plus 3.23% C, according to Cordwell. Snap shares have gained 400% over the past 12 months as the S&P 500 SPX, plus 0.42% has climbed 53%. It's unusual for a company worth more than $100 billion to aim for 50% annual revenue growth, one analyst suggested. Snap Inc.'s new growth targets and plans to dramatically expand the revenue potential of its various features drew praise from analysts. The social media company forecast at its Tuesday Investor Day that it could drive at least 50% revenue growth for multiple years, a projection that helped swing Snap plus 4.93% stock into record territory Tuesday and drove praise from analysts Wednesday. Shares are off 0.4% in morning trading Wednesday, after soaring 11.1% to a record close of $70.45 on Tuesday. Snap has gotten healthier from the pandemic with an accelerating product pipeline, diverse advertiser demand, a well-developed self-service ad platform, and a larger engaged audience, wrote MKM Partners analyst Rohit Kulkarni, who also hinted at the rarity of a $100 billion company setting out to grow revenue at 50% annually. It has a buy rating and an $83 price target on the stock, up from $65 prior to the event. Wells Fargo analyst Brian Fitzgerald wrote that the 50% target, by any reasonable interpretation, would significantly exceed our prior forecasts and pre-event consensus, and argued that Snap has enough runway in its 5 key platforms, Stories, Camera, Spotlight, Map and Communications, to achieve its outlook. He has an overweight rating on the shares and boosted his price target to $91 from $67. Fitzgerald highlighted management's upbeat tone on the revenue opportunities across its products. Snap users open the Snapchat app 30 times a day on average, for example, and the vast majority of users engage with Snap's augmented reality tools, some of which are sponsored by advertisers. We believe the camera will be a multi-billion-dollar platform and that augmented reality represents our most exciting long-term opportunity, Chief Financial Officer Derek Anderson said during the Investor Day presentation. For MoffettNathanson analyst Michael Nathanson, the presentation validated his bullish January upgrade of Snap's stock. He titled his note to clients, "They're who we thought they were." Nathanson keyed in on a comment from Chief Executive Evan Spiegel a year back, when he told investors that Snap would have to grow annual revenue by more than 50% for several years to approach Twitter's level of average revenue per user, something Spiegel deemed possible at the time. What seemed like a possibility before the COVID-19 pandemic now seems like a realistic target given the momentum in their business, Nathanson wrote, while boosting his price target on the stock to $80 from $61. Bernstein's Mark Shmulik called Snap's Investor Day flawlessly executed, and said that the event made him incrementally confident on Snapchat's march towards super app status and beyond. Apps like WeChat in China that bundle various services in one place are often called super apps, and Shmulik argued that in the US, it's no longer a reach to claim that Snapchat may be closest to super app status. He said that the company is making progress on achieving both utility and entertainment value for users while ensuring that Snapchat is useful for users on their own as well as people looking to do things as a group. He has an outperform rating on the stock and boosted his price target to $80 from $60. Snap shares have gained 56% over the past 3 months as the S&P 500 SPX, plus 0.42%, has increased 7%. So here we are now with the projection and forecasts. Statistics show that Snap Inc. has underperformed its competitors in share price, compared to the industry in which it operates. Snap Inc. Snap. Shares have gone up plus 118.7% during the last 6 months, with a year-to-date growth rate less than the industry average at minus 300% against minus 1.2%. Yet analysts are ramping up their growth forecast for the fiscal year 2021. Revenue is predicted to grow 37.5% this quarter and then jump 77.8% in the quarter after that. In the rating firm's projections, revenue will increase 52.3% compared to the previous financial year. Revenue for the current quarter is expected to be $742.04 million as predicted by 31 analysts. Meanwhile, a consensus of 31 analysts estimates revenue growth to $821.01 million by the end of June 2021. As per earnings report from last fiscal year's results, sales for the corresponding quarters totaled $462.48 million and $439.06 million respectively. In this case, analysts expect current quarter sales to grow by 60.4% and then jump by 87% in the coming quarter. An analysis of the company's performance over the past 5 years shows that the company's earnings fell an estimated minus 15%. While earnings are projected to return 13.6% in 2021, the next 5 years will return 0% per annum. So, what do you think? Should we buy Snap now before it's too late? Let us know down th. Folks, if you want more insights like this, please make sure to check out the other videos under Bearish Bulls and don't forget to subscribe. Thank you so much for watching and we'll see you in the next one.